Yeah, traders, welcome back. Uh, we have made a video before about a strategy called Traders Don't Fear. That strategy is for the people or the traders who will like to leave their trade for like 8 to 10 to 15 hours or even the next day. Okay? And a lot of people watch that video and they really appreciate it, like it helped them. Now we have think again about the problem of the some traders who like to sit in the front of computer like 24 hours. They want to take money even the trade is short. A short time, they want to take money. If the trend is going up, they want to take it. If the trend is going down, they want to take it. But this kind of traders also have a kind of problem. You see, some of this market we see, some will just start good and end up so bad, and some traders get fear entering into those kind of market. They will look the market going up and up and up and up, and they will enter the trade when the market is finished. Some trade will start good and end up bad, and some trade will start so bad and end up good. You understand? Some traders will sit down, they are looking at it as at a trade starting so bad, but they don't know that the end result will be good, and they will just opt out of it out of frustration and impatience. They will just get out of it and get out of it at a loss. You understand? So now we have come with a strategy that will help you, the short-term traders, to get your money. If the trade is up, you want to get money. If it's down, you want to get money with this simple strategy that we have built for you. Okay, on my chart here, let me remove these things so you can see my chart so clearly. On my chart here, I have plotted three lines here, and this three line is the blue line that is representing the price. Here you see the blue line representing the price. Here you see the green line representing the it's a 12 EMA, the green color 12 EMA, and the red one is 26 EMA. You see, the 12 and 26 EMA, which is the red, and the green line here, it's just the same EMA on MACD histogram. But here, we are not using the MACD histogram. We are using this as a strategy, okay? And this strategy will teach you when to enter a trade. A very good entry point is what it's going to give you. And all those bad trade and all those bad moves, this strategy will help you to avoid it. Okay? Okay, so what is going to happen here is that when you look at the green and the red here, where they cut each other, you see, the red and the green cut each other from here. This is when we enter the trade. And if we enter the trade from the cut of this green and red, we are going to take our profit up somewhere here or here. So if we take here and here, I think it's almost same. You understand? But this has given us a very good profit. Look at, if you take a profit from here, but you plot a trade all the way down here, you have seen that the pips you made is not even something small at all. Okay, look at here also. We have taken a trade from here, the cut of the green and the red, but still we have taken a profit from here or here. It's almost same. You understand? And look at what is going on here. You see that we have plotted a trade from here, but still the green and the red line have cut, but still it's still going up. And where are we gonna exit the position we have made. We have seen the entry point at the cut of the green and the red line, but where are we gonna exit? Okay, now this strategy like this is showing you a good entry point, but it's not showing you about the exit. Okay, but if you know about the candlesticks message, you will know that this is time to exit. When you see this arami, this is arami, or what they call it, this is where you are gonna exit, because this is a signal for a change of trend. But some people look at here, this is where you exit. This is where you're gonna exit, because the buyers are pushing up so hard with a hard force. But some people don't know about this candlesticks message. This is why I'm gonna add a stochastic momentum index that will teach you, that will show you exit position. Let me add it. Stochastic momentum index. Good. This is stochastic momentum index down here that I've just added. Okay, now how do we exit? We are going to exit our position at the bend of stochastic momentum index. When it bend and go in the opposite direction, it's been going up all right from here, and now it started bending, and when it bending this way, we have to exit, or we can exit at the touch. Okay, but at the bend is the best. You understand? When it's bending, when it started bending, then we exit our position. Okay, let's say that we have plotted a position right here at the cut of this red and green line. Okay, but we trade all the way here, but see what is going on here. A red candle have come, but this doesn't make us to fear or panic, because the stochastic momentum index is still going up. Okay, this gave us some patience, and we came all the way here, and see what is going on. All the way here we are still in profit, but all the way here, okay, we took our profit because we have seen this red candle, or we have seen stochastic started to bend. Okay, this is where we exit our position. Okay, this is where we exit our position, or we exit here where stochastic have started to bend. So that is where we exit our position. Okay, and for people who exit late, still made some profit, because they exit maybe here or here, they exit from this candle. So when you look at, when you succeed to plot a trade from here, where the cut, this is the cut, you have placed a trade from here where it cut, and if you exit here, or here, you made a big profit. Okay, you made a big pips. Okay, and look at here, we don't use the stochastic cut to place the entry for a trade. Okay, because it's not a confirmation. Okay, it's not a confirmation. This line, EMA 12 as green and EMA 26 as red, is the one we use for confirmation to enter a trade with this signal. Okay, and then we use the bend or cut of stochastic, or the bend of stochastic. Okay, the bend or the cut of stochastic to exit the position, At that time, you could have seen what the blue line is doing. Also, the price will be bending down. Okay, the price will be bending to go get flat. That is when we exit a position. Okay, but look at what is going on here. We don't use the stochastic to place a trade. Okay, here it's going down. Some people will want to use this stochastic to place a downward for selling position. Okay, for selling position. But when you see what is going on here, okay, bro, you see what is going on here. The green and the red line is still far away from each other, which shows that this MACD, our signal, has not given us any signal to place a selling position. Okay, good. And when we got here, this MACD signal, the green and the red, caught each other from here. This is where we plot our selling position, and we make profit all the way through here. You understand? Although it's not a big profit we made, but at least it helps us to avoid all this flattening situation. all this flattening situation is a sign of bad market. And if some people is using the MACD histogram, I think they would have taken this position, and they will lag, and out of impatience they will get out of the market with a loss, and never knowing that this is going to cut from here, and this will be a very big profit. Okay, it's a big move and a big profit, I think, here. Okay, and then what is the next thing? We enter from here where this green and red has cut. Even the price have been trading down, okay, but when the green and red has cut, we enter the position. Okay, we enter the position, you understand? And then we came to take our profit somewhere here when stochastic was trying to bend. Okay, we took our profit here where stochastic is trying to bend. When it is preparing to bend, we took our profit. Okay, we took our profit and we made a good pips out of this. Okay, but look at what is going on here. Stochastic has bent again, going up, but we don't use stochastic here to place a trade for entry. We only wait for the MACD signal to cut, and they cut here. Okay, they cut same place where stochastic cut. They cut same place, which means this is going to be a good market. And look at the price is trending up. Okay, so from where they cut here, okay, this is where they cut, and from where they cut here, we place a trade, and then we keep going up. We watch and keep going up. Okay, so where do we exit? We are gonna exit at the next bend or cut of this same stochastic. That is where we are gonna exit. No matter what, we are coming with profit. Yeah, we are really coming out with profit out of this kind of trade, following this strategy. Okay, now I want to show you a situation where this strategy has helped you to avoid some bad market. Okay, it's not only this one. It's not only this one. I want to show you something. Okay, I'll show you something. Look at what is going on here. Okay, the green and the red has made a cut from here. Okay, and the price, the blue, it's trending up. Okay, and by the way, stochastic has cut before that, but we have to wait for confirmation, and the green and the red cut. Then we place a trade. Just look at where stochastic has cut, and look at where we came to enter our trade. Okay, this gave us patience for confirmation of the market that this is going to be a good market. Then the green and the red has cut, and we came up all the way to here. Okay, and then we saw this as a candlestick message signal to exit. If you understand candlestick message, you will exit from here. But waiting for the cut or the bend of stochastics is also same here, where you have seen it that stochastic has bent. You can exit from here also. All the remaining is flat, which is a bad market situation. But even it's flat, stochastic has cut. Okay, this is for exit of a market, final exit of your trade. Okay, this is a final exit, but we don't use it to plot a downward trade. It's also a confirmation for a downward trend. That downward trend is coming, but when you look at what is going on here, it's still flat. So we took a little patience to wait. Okay, until what happened? Until they came, the white and the red came here and caught each other. But what happened? This is why we need to always be patient and careful. What happened when they caught here? The red went flat and the green went flat. So this is a symbol of a bad market. I was in this trade. I took this trade using the MACD histogram because I thought it's going down, but it was not a good situation, was a bad situation, and I get out of this trade by frustration, and I lost little money. You understand? But the end result was good up to this place. Okay, but what I'm trying to say is that some traders may be looking at this market at that time and think, okay, it's going down, but wasn't giving a good result at all. Was frustrated market, was frustrating. You understand? And when this market got here, some people would think it's going down and still enter, but it bent. You see, it bent, and this white and red went to court again and gave us a good uptrend trade. You understand? So what I'm trying to say is that this strategy helps us to wait. It helps us to wait and give us a very good entry point to enter the trade. Wait, let me put a MACD histogram and you see what really happened. What really happened? I want to show you what really happened. Let me remove the stochastic index. Look at what happened here. This is exactly what I'm talking about. You see, I entered this trade with the MACD histogram thinking that it's going down. But when you look at what happened from here to here, everything was flat. I thought this is where I got frustrated because I was not using this strategy at that moment. This is where I got frustrated. MACD was heading down, okay? MACD heading down, okay? Good. But to my experience, if MACD is heading down or flattening or behaving somehow in the up here, in the upper hand here above this line, I know some buying situation is happening. Okay, so that is exactly what happened here. I thought it's going selling and trading down, but the situation was so frustrating that I had to get out of the market with a loss. But look at the reversal, and this is where this white and red had to cut each other, and the red became flattened, and they came to cut and reverse up, and this is where I entered the new good position that I came out with profit. Okay, so what I'm saying is it is always good to wait, and this strategy have teach you how to wait. And if you want to use this strategy, I bet that you always need to follow the instruction as it is given, you know. And if you are good with this strategy, I don't think you need a MACD histogram. All you need is this strategy on your chart and all these lines on your chart, and you just need a stochastic momentum index for exit to determine exit of your position. So thank you very much for watching. Remember, once again, this is for the people who sit 24 hours on the internet trading and they just want to take money. When the market is buy, they want to take money. When the market is sell, they want to take money. And this strategy has teach you how to avoid a bad market and has teach you how to enter a trade at a very good time. Thank you very much. Thank you for watching.